All right. Good morning, fellow traders, and welcome to today's live trading session where we're going to look at the markets and we're going to try to see if we can find some high probability opportunities in the market. And yeah, today was sort of unusual. It seems like the market may be in a period of transition. Of course, we don't know, but all we can do is go off of what we see. Remember, we trade what we see, not what we think. It's not about forecasting. It's about looking at what price is doing and coming up with a plan, coming up with a decision that fits our trading plan and our approach to trading the market. So of course, right now we're going to talk about day trading setups. We use this momentum strategy where we look at certain pairs, we see which one is moving and has directionality. Okay, and the first pair we're going to look at for this morning is the euro pound, and we're currently looking at the 1 hour chart. So what we can see right here is pretty obvious. We see price, has been moving up. It's been creating, of course, higher highs and higher lows. We see price make a higher high, higher low, higher high, higher low, higher high, equal low. And it started consolidating here and it broke to the upside and created a higher high. So then we're definitely in a bullish environment on the 1 hour time frame. However, if you look to the left, we can see that price is testing an area of resistance or supply. You can see this on multiple time frames that this area right here is an area of resistance or supply. So, we have to be careful because we can see that the last time price came to this area, we saw a strong sell-off to the downside. This could have been fundamentally driven, but it seems like every time price came to this area or vicinity, we saw a nice strong push to the downside. So there's a possibility we can see something like that in the near future, a retracement. But anyways, what we see is that we have a bullish environment on the 1 hour. Let's see what we see on the 4 hour. We still see this bullish environment on the 4 hour. We can see price testing 4 hour structure resistance. And we also have a bullish environment on the daily, right? The daily is bullish, even though price has been in this consolidation phase. For the most part, it's still bullish. So what we're going to do, we're just going to stay on the side of looking for longs in the market, looking to buy the dip or buy the pullback. So the next thing we have to ask ourselves is, where do we want to buy at? And, of course, what you always want to do, you always want to buy at areas of supply and demand. And what we can see is that, in this area right here, we see that this area was an area of demand. Of course, we had balance right here where there was an equal number of buyers and sellers. And if you look to the left, we have, this area of demand right here. We have, price shot up, structure area, right around here. So we know in this area, we should expect buyers to come in. That's pretty obvious. But do we expect a deep retracement like this and then a push up? Probably and probably not. Like usually when price moves this strong to the upside, it's a more shallower retracement. So, what we want to do, of course, we want to highlight this area of potential demand where buyers are. So we can definitely highlight this particular area and say, hey, buyers could come in somewhere right around here. Let me change the color and let me make this orange. But yeah, buyers can come into the zone. So we're definitely going to look for that. But what I want to do, I'm going to drop down to the 15-minute and I'm going to see what we see on the 15-minute. So on the 15-minute, we have somewhat a little bit more clarity on what's taking place. If you wanted to, you can even draw out the zones on the 15-minute of, where price make higher highs and higher lows. And the area that I'm interested in is this area right here, right around here. This area is an area of interest right here where I think price could retrace to and find some demand. So then what I want to do, I'm just going to draw another zone from here all the way up to here. Maybe change the color a bit. Let's make this green for an area of demand. And I'm expecting price to test this zone right here on the 1 hour. And if you go to the 1 hour chart and you draw on your Fibonacci from the lows, let's do it from this low right here all the way up to the high right now. We know that this is below the 50%, which is a good area to look for potential buying opportunities around. So then what we want to see in this case, we want to see price retrace to this particular zone or come near it, or at least test the 50. And then from there, we want to look for an opportunity to go long or buy on bullish confirmation. But we have to be careful because this is an area of resistance or supply. We can look to the left and see that. So then if I do enter this buy, I'm not going to shoot for extended targets. I'm just going to simply target the highs. Just simply target the highs. Just take what you can, or at least take partial profit at the highs. You don't have to close out your trade entirely, but you can take partial profit near the high. So that's what I'm looking for on this particular setup or pair. We're looking for a buy opportunity. We want to buy the dip, buy low, buy at a discount. That is what we're looking for right now on the euro pound. So then I'm going to place a price alert right around the 50. Price could continue pushing up higher, which means we would have to modify this Fibonacci retracement. But in the meanwhile, what we're going to do is add an alert at around 88.50. And what we're going to say, crossing 88.50. We're going to put the date, which is the 11th, January 11th. We're going to say price pull back to test. This says structure plus 50 fib 1 hour. We can say look to buy. All right. So yeah, we're going to look to buy. See, we have an opportunity to buy. But if price gets to this zone, then we'll look for, another opportunity to potentially buy. If we're still in a bullish environment, on the 1 hour time frame. If we see that momentum is still to the upside, we can still look for that buy. And also, for all we know, this could very well be, a 4 hour pullback. Because you go to the 4 hour, we do have this zone right here of structure, on the 4 hour that we just drew in. So price could retrace deeply, give us a 4 hour retracement and then push higher. But as I mentioned before, we're testing all this area of supply. So all of this is, there's a possibility it can happen, but bear in mind we are testing this area of supply or resistance, and there's we don't know. Price could be in the middle of a rotation lower, so you just have to play it safe and just go with where momentum is currently. Momentum is to the upside, so then that's where we want to look for our buy opportunities. So are there any questions in regards to this particular setup on euro pound? Going once, going twice. All right. So if there aren't any setups, then we can move on to our next example, which is a pair that we don't usually talk about that much, but I want to talk about it today because of this huge momentum to the upside. The euro Swiss franc. All right, so right now we're looking at the euro Swiss franc. We're currently looking at the 1 hour chart, and we can clearly see that this has strong volume candles to the upside. Strong volume candles. We're pretty much bullish on this pair. The Swiss franc has been really selling off, and what we need to do is take advantage of that particular sell-off in the Swiss franc. So of course, this is very similar to what we saw in the euro pound. We saw this consolidation, this buildup of liquidity, and then we see an expansion to the upside, a strong expansion to the upside with huge candles. So it's pretty obvious this is an area of demand that we need to, pay attention to in the near future. But what we want to do is look for a potential buy. We want to wait for price to retrace and look for a buy, because it's pretty apparent the 1 hour is bullish, 4 hour is bullish. It definitely broke these highs right here. So we're in, almost no man's land, you could say. But we have a lot of room to go to the upside. But if you go to the daily, this is what we see on the daily. Price, broke to the upside. Looks like it wants to break above these highs as well, even though today's candle hasn't closed. But the next area of supply, you could say, will be right here in this area. So right in this area is where we could encounter some resistance in this area. So what I'm going to do is, of course, I'll change the color a little bit, but in this area we could see sellers come in and help create a correction in price. If not a reversal, a correction. So what we want to do here, we want to look for opportunities to continue this buy or this move to the upside. So going back to the 1 hour chart, we already know that there's momentum to the upside. Now we need to look for an opportunity to pull back, an opportunity for a pullback. So I'm going to draw in this zone right here, but I may modify it. I may modify this particular zone. So we're going to go down to the 15 minute. We're going to see what the 15 minute shows us. And okay. Yeah, 15 minute doesn't give us too much to go off of. So right in this zone, somewhere in this zone, likely we would like to go, anywhere around the 50 or above the 50. That's where I will look for some buy opportunities around. So again, I'm just going to place an alert right around here at the 50. Usually I want to see some type of structure, but in this case I don't think we see anything around here. Let me go. Yeah. The only thing we see on the 15 minute is a hesitation type candle right here at 4:45 in the morning. There was this red candle, this anomaly. That's the only thing that we see that's close to what we will define as structure. So this one is pretty interesting. But what I'm going to do, I'm just going to place I'm going to place a price alert right here, right at the high of the zone, and then I'm going to look to see when we get that 3-wave pullback, because I still want to see price create a 3-wave pullback on our trigger time frame before we consider going long. Testing, let's say 382, drop down to trigger, 3-wave pullback, look to buy. So yeah, that's what we're going to do on this particular pair. So again, what we want to do, we want to wait for price to retrace somewhere into this zone. Hopefully it can get to around the 50 or close to it. And then from there, we want to look for a buy on bullish confirmation, and we can shoot for extended targets since we have nothing above us. So yeah, that's what we'll be looking for. We'll be looking for that type of move to the upside. And if you're really aggressive, then you will be looking to close out somewhere around here, maybe at $1, at parity, right at parity, 1.000. Some people may consider closing out right around this particular zone. It's up to you. Whatever you want to do is up to you. But let me drop this line here at parity so we can know. So right around here, we know that this is parity, so we can definitely be on the lookout for how price responds to this area. But for the most part, again, we're waiting for this dip in price and a continuation of this bullish trend to the upside. Are there any questions? Excuse me. Going once, going twice. All right. So let's look at another pair. Let's look at US dollar Swiss franc. We know the Swiss franc is really selling off. Let's see what's happening with the US dollar. Okay. So right here, we're on the US dollar Swiss franc. And what we can clearly see is we can see price was in this accumulation phase. And then, after having this strong decline to the downside, price started accumulating orders. And then we had a break to the upside, which means that, of course, the bulls took over, the buyers took over, and we should be looking for an opportunity to buy on a pullback in price. And if we're going to look for a buy, we will want to look for a buy at areas of demand. This is an obvious area of demand right here in this particular area. So we do have some support, some structure right here. If price can retrace all the way down here, that'll be great. But let's see what the 4-hour is telling us, because on the 4-hour, we may see something quite different. On the 4-hour, we definitely see that there is momentum to the downside. 20 simple moving average is sloping downwards. We see price give us this 3-wave correction, complex correction on the 4-hour. So then there is a very real possibility we could see a reversal as well, even on the 4-hour chart. So the buy that we're looking for may not take place. We could see price reverse, which makes this pair a little tricky, US dollar Swiss franc. But let's go to the daily. Let's see what the daily bias is. The daily bias is also somewhat bearish as well. So if you wanted to maintain a bias, then what you could do is just look for that sale to take place, because we see here that the daily is somewhat bearish. 4-hour is bearish. The only time frame that's bullish is the 1-hour. Also, we see that the daily is testing a minor area of supply right here. You can see it, right around here. Well, I didn't do the whole candle, but this zone right here is where sellers came in, helped push price lower. We can probably get a better zone on the 4-hour, but you guys get my point. My point is this, is that there's a possibility we could see sellers come in instead of buying. So on the 1-hour, we see potential buying opportunity. On the 4-hour, we see a potential selling opportunity. If you want to sell, since this is a complex pullback, and what we can assume is that this area is an area of demand, I would wait for price to give some confirmation first. It would have to clear this area of demand first before we consider selling. That's how I would do it. Or what you could do is wait for price to break this trend line before you consider selling. So I know that would take a long way. It'll take a while for that to happen, but that is what I would do. So in the meanwhile, what you can do, if you wanted to, on the 1-hour, you can just simply wait for price to get to this zone. If you see bullish confirmation, and then you can look to buy. So this is one of the pairs where if you do buy, you could just wait for that bullish confirmation. But if you're the aggressive type and you don't care, you use good money management and risk management, then you can look for an opportunity to enter once price comes into this particular zone. But we'll be looking for a buy, and what we can do is trade it up to the highs, since we're still in a bearish environment to some degree. But yeah, so that is what we will look for. Let me go to the 15-minute, see how things look on the 15-minute. Okay, so yeah, this is the 15-minute chart. We don't really see much here to help us with our decision. Of course, we have this area of structure right around here, which price may find some support right around here. So then what I'm going to do also, I want to highlight or circle this area as well. We have the indecision candle and we have structure to the left, because price could find some support right around there as well. Let me drop a line. right here and make this yellow, or I'll make it that color. But yeah, price could find some support right there as well. And if we wanted to, we could do the Fibonacci. Where is this in regards to Fibonacci? Yeah, this is right around the 50, right around the 50 area. So yeah, we can look to see how price responds to this area that we just drew in, where we had structure to the left. Remember, what was once formerly resistance can become support once price breaks above it. So we'll look for an opportunity to somewhat buy right around here, in this area where we have confluence. On the 15, we have the 20 simple moving average. We have structure. We have this indecision candle right here, which really doesn't mean anything right here. But, this is a possible area where we could see the sellers come in as well. But or the buyers come in as well. So what we're going to do, we're just going to simply sit on our hands and wait for price to come to us. We're not going to chase price. We're going to wait for price to come to us. So right here in this area is where I'm going to put a price alert. And I'm just going to say, let's look at the chart. Once price gets to the zone, we'll take a look to see what's going on. Price testing area of interest plus 50 fib, drop down to trigger, three-way pullback, look to buy. All right, so yeah, we'll be looking to buy once price tests this area right here, right around a 50 and right around structure. Look to the left, you see all this structure to the left, which is something you want to pay attention to. But we could get a deeper retracement into this area of demand. So if you wanted to, you could add another alert and say price testing 1 hour demand, look to buy. So we'll just do that real quick. Price testing 1 hour demand zone, look to buy. All right. All right. So yeah, we'll see what happens. But yeah, this is the US dollar Swiss franc. And we're currently looking at the 1 hour chart. We're waiting for this pullback. And let me add this up arrow to let you know that we'll be looking for longs. We'll be looking for an opportunity to go long and to buy this particular pair or setup, or pair. So all right, are you guys or do you guys have any questions about anything else? If not, then should I do one more? Yeah, well, I'll let I'll let Marvin come and talk about the fundamentals, and then we'll see where we go from there. But all right, or do you have anything you want to share, or no? Not really.
Well, I can, but
Yeah.
then if you have another one, you can do that.
Okay. Well, we can do. I guess we can do one more. Let's just see what we have. So, all right, let's do this one. Let's do pound. Let's do pound USD, since that is one that quite a few traders from our group like to trade, pound USD. All right. So right now we're looking at pound USD, and it's pretty apparent what's happening. We see price consolidate right here. As a matter of fact, if you draw in your waves, you would know exactly what to look for, because on this particular chart, we see that price, of course, came from these highs. We had this right here. Price made a lower high, then it made a lower low, lower high, lower low, and then from there we have all this movement right here and this push up right here, which formed this low, and this push up right here. And as of now, price still did not give us a clear break in violation of this structure right here, of this structure level right there. So right now we're still not in a bearish environment, and anything can happen. And what we could be seeing is a potential pullback on the 4-hour and then expansion higher, or some sort of pullback and a potential expansion higher. That could very well happen. And if you go to the 4-hour, what we see is a strong impulse. I know we see these waves. I should have probably hit these waves on here. I'll just do 2 hours and yeah, but we see these waves here, and what we can assume from here is that, hey, on a 4-hour we have what looks like a potential bullish environment on the 4-hour. So you have some people looking to buy right about now, and some are looking to sell. And I think there's reasons to do both eventually. I mean, for the sell, we need to wait for price to break the low that we just formed right here in order to get the confirmation. But we're still somewhat in a bullish environment. So if you want to, you can look for that buy, because there's reasons to support a buying decision. We see price almost near structure. Look to the left, structure leaves clues. Let me draw that in as well. We have this structure area right here. So let me just draw that in right here. And we can see that price is really testing this area right now. This area of 4-hour structure support. What was once resistance has become support. So, that's something that we can definitely look at and pay attention to, because what we may see is a potential bounce to the upside. Price may go a little bit deeper in this zone, it may, and then from there we can see price possibly expand higher to the upside. That's a possibility. Remember, this is on the 4-hour chart, and on the 4-hour chart we do see price testing this zone with a 3-wave pullback. We see a leg A, leg B, and leg C down here. So there's a possibility we could see price work its way to the upside, or a potential reversal. And if you need more clarity, then what you should also do is look at something like the Dixie. You can pull up a window to the side and go to the Dixie, DXY, and we can see how that is looking. How is the Dixie looking? So we can go to, let's say, the 4-hour. Let's see what's happening on the 4-hour. And we can say, hey, okay, we do see a lot of momentum to the downside. We see the small correction, which means that there still is a bias to the downside. We see these small candle bodies. What it tells us is that, hey, we're just resting right now. We're preparing for a possible expansion lower on the dollar. So what we see here is dollar weakness. And once you get a bias for the dollar, it can help you have a bias for all the other pairs and different assets. I mean, especially the US dollar denominated in US dollar base pairs. So then what we can do here, we can, say, hey, price is testing an area of supply on the Dixie. Look left. You can see that price is testing this area of supply. So then what we can assume is that, hey, a reversal could be taking place soon. And if you want to, you can go down to the 1-hour, see if you see a 3-wave pullback on the Dixie. And if you do, then that can support a decision to sell the dollar. And we certainly do see that 3-wave pullback. We see, okay, yeah, this one right here is pretty interesting, but we see a leg A to resistance. Then we have a leg B down here, and then we see another leg C right back into this resistance. And then now we should expect price to sell off if we're going to continue to see this sell off. So we do see this 3-wave pullback, this ABC pullback on the US dollar currency index, which means that for the pound USD, we may want to look to buy. We may want to look for buys instead of sales. So, right now, we're not going to look to sell. We're going to look primarily to buy, based off of what we're seeing on the Dixie. And if you want to wait for confirmation, you can wait for price to break and close below this trend line. If that's your thing, if you really want to wait for that confirmation, you can. But based on what we see right now, we're bearish the US dollar. Right now, we're only looking for opportunities to sell. And this is on the US dollar currency index. This is the weighted one. As far as equally weighted index, well, let's see what the equally weighted index tells us too. So I think we have it right here. Let's go to equally weighted. Okay, so yeah, for the equally weighted, it looks a little bit more bullish, but let me delete that. And let me do this, remove the drawings right there. So yeah, but we still see a three-wave pullback here, leg A, leg B, leg C. Let's go to the 4-hour. Let's see how that looks in light of everything. And yeah, we're still somewhat in a bearish environment, small correction. So then when you see something like this, a strong move to the downside with a small correction, what does that look like? What pattern is that? What pattern is it that we could be potentially seeing? So I'll give you guys a few seconds to chime in. Yep. Okay. Yep. Stuart said a bear flag. Exactly. That's what we could be seeing right now is a bearish flag pattern, and price could break to the downside. So then what we want to do is look for opportunities to sell the dollar. We're not bullish the dollar. We want to look for opportunities to sell the dollar. The dollar is king. The dollar is bearish. So we see that right here. And, you know, we also see the three-way pullback that we typically want to see even on the dollar. Yeah, well, we don't see supply and demand. We see structure right around here. We don't see an area of supply, but we do see structure. Price tested, definitely tested this area of structure on the Dixie. So in many cases, that's all we need. What we see on a 1 hour, we see price come, test what was once support. That area becomes resistance. And then it gives us, you know, gives us that three-wave pullback that we typically want to see. Leg A, leg B, and leg C. So yeah, we'll be looking to short. But yeah, that's pretty much it for the dollar index. And yeah, that means that on many of your dollar pairs, you may want to look to sell the US dollar. You know, during this session. And then it makes a lot of sense because we know that during the European session, we saw the dollar pretty much slide to the downside from, as a matter of fact, let's calculate and see how far price fell for the day. Let's go to the 1600 hour right there. Okay, and the highs right here. Let's see how far price fell, because that can help us to determine what we need to do. So from this high right here all the way down, so there's still room to go on this dip in price. If we do see, if price still has this bullish bias, we could see price expand a little bit lower into this zone, because on average price travels a certain amount of pips per day. We can figure that out by going to the daily chart and looking at our ATR indicator. We can do that. We can say, hey, what is the ATR indicator telling us? And the ATR indicator tells us that price travels at least 137 pips per day. This is the average true range indicator.
14 days.
Yeah, over 14 days, about 137 pips. But also, let me expand this out. Also, we can go to Mataf, our famous website called Mataf. So where's 137? 137 pips will be all the way down here, even past the zone. Yep, so right around there. But let's see what Mataf tells us, because Mataf could show us something completely different. So let me go right here. off.net, go to this Forex volatility tool where we can look to see over the last 10 weeks what has been happening. How does the pound USD move on average? So we're going to click on pound USD, and we can see on average it moves 152 pips per day, but based on the ATR indicator, wow, we see price could move a potential 147 pips. It moves 147 pips on Wednesdays, so then that's something for us to definitely look at. And most of the action came 2 hours from now, so within this 9 o'clock hour my time, Central Time, we could see price start really pushing higher. So that's something for us to take note of. But for the most part, it moves an average of 147 pips per day. So if that's the case, then we can definitely see price move a little bit lower. So then what we can do, we can identify a zone where price could find some support. So let's do this. Let's draw in this special zone from this area right here all the way up to the lows of this range right around here. This is where price could potentially go. So we'll have this right here. This will give us what is it? Is this 100 and, well, it's like 116, but 137 is a little bit lower, but somewhere right around this zone right here is where price could potentially go to. So but yeah, this is with the ATR's help, and also the Mataf volatility tool. There's a possibility we could see a further sell-off in the US dollar, or price could just expand from here, and we'll just see one of those days where we don't see that average daily range met, for the day. So and there's quite a possibility that could take place as well. But yeah, so that's all that I have right now. So what I'm going to do is pass the mic over to Marvin, and he's going to talk about some things fundamentally, and then from there we'll maybe call it a day. Yeah, so I'm going to try to be brief because there's not really much happening for today. I don't know if you guys had a chance to look at the economic calendar, but today is a pretty light trading day on the economic docket, or there's not as much event risk or economic indicators coming out on the docket. So that would mean that traders would be left to just simply following the price action, looking for technical clues in the market, primarily trading off of technical analysis versus looking for headlines to serve as a catalyst or to reinforce some of their trade setups. But today is expected to be a light day, and we can see that even with the Dixie. Let me go to the Dixie right here, because what I wanted to point out, well, before I move on, what I wanted to point out is that there's still a case for us to see not a continuation of this slide lower, this US dollar strength. And the reason for that is because the market is sort of pre-positioning themselves ahead of some major event risk on tomorrow. All eyes are focused on the US CPI data, or the US inflation rate data. So then that's the reason why we're witnessing the type of moves we're seeing in the dollar. So it doesn't have to slide further. If it did, that means that the market could be pre-positioning themselves possibly for a more hawkish Fed based on what they project the CPI data will turn out to be, but will be reported as. But let's go to the Dixie real quick, so then we can take a look at that, the Dixie chart. And because I wanted to point out how the Dixie has primarily been in consolidation. I know Melvin, he brought up a chart about this earlier, and how really this is indicative of really the indecision in the market. The market is sort of in a wait and see mode when it comes to positioning in the dollar, simply because they don't know what the Fed is going to, they don't know what the CPI numbers are going to report on tomorrow. Are they going to report that inflation is peaking and we're seeing a softening of inflation? If they do price in, or if we do see signs of inflation pulling back or inflation waning, then that would definitely contribute to more dollar weakness, like Melvin was referring to, where we may see the dollar continue to sell off and tumble lower as the market sort of discounts any additional tightening or rate hikes from the Fed. So right now, the dollar is sort of in consolidation. It's in wait and see mode. It's sitting in the sideline. It's hard to determine the conviction on an intraday perspective. Well, really, for the past few days since Monday, it's been sort of in this corrective mode. But overall, we can see the dollar has been deeply selling off as we begin to see signs of inflation peaking. And there's been this talk of a possible soft landing if the Fed chooses to pivot and focus on some of the other growth related concerns. There's a possibility that we may see stocks remain elevated as a result of a less hawkish Fed, less hawkish central bank. So then this is pretty much, what the markets are saying about the dollar. They're sort of on pause, on hold, and wait and see mode. And this is a picture of just indecision, lack of conviction in the market. But you remember, in currency trading, we're not just trading one specific spot or one specific currency. We're trading one currency in comparison to another. So then when trading US dollar based or US dollar denominated currency pairs, you got to keep in mind that while one currency could be stabilizing and moving sideways, there's another currency or the other counter currency could be trending in a particular direction. So you want to take advantage of that dispersion, that rate differential between those two currencies that are grouped together within the pair. So yeah, so I just kind of wanted to point that out. But for today, sentiment is pretty bullish. Let's go to FinViz so we can see our heat maps, our future heat maps, to get an idea of how market sentiment is on pre-Wall Street. And as you can see right here, if you look at this futures heat map, you can see that our equity future indices are all trading in positive territory. Global equities has been moving to the upside ever since the Asian trading session. I know we had what was the catalyst for Asia was when we began to see reports about China allowing some of their Chinese companies to import coal from Australia. You remember there was some trade relationship issues going on between China and Australia, almost like a miniature trade war. And, you know, of course, we just heard that the PROC, they're allowing Chinese companies to now import their coal from Australia. So then this could be a sign of just a strengthening or a healing of some of that tension and relationship between China and Australia. And that's when we saw that risk appetite really kick in during the Asian trading session. And it seems to be passing through the European and on to the US trading session. So right now, based on what we see with our Wall Street futures, especially with these four benchmarks here, with the Dow Jones, S&P 500, NASDAQ, Russell, E-mini futures, we're expecting to see a positive open in U.S. equities. And but of course, sentiment is still tentative. Anything can happen during the session. I know, just like Melvin said, we are awaiting dollar strength. So if we do see a pickup in U.S. Treasury yields, if we do see a sell-off in bonds, as traders begin to really toggle back and forth between recessionary concerns, inflationary concerns, then we may see stocks also sell off or either stay sort of pegged to their opening ranges for the session. But this is what the heat map is showing now. We're seeing crude oil pick up and move to the upside, which is interesting. It's been sort of trapped in the range, crude oil, but it seems as if right now it wants to make attempts to break to the upside or push higher. We're seeing gold and silver sort of maintain their bullish bias to the upside. And you got to see how gold right now, its luster is starting to return. It's gold luster and appeal is coming back into the market as we're seeing more talk of recession start to slowly work its way in. Right now, because there's talks of recession, investors are seeing gold as a good safe harbor to sort of, place their money and store their money, a good store of value in the midst of inflation or, you could say recession. So then you see gold benefiting on the US dollar weakness, silver benefiting along with the other precious metals. Um, Copper is picking up to the upside, which is an industrial metal. So that's sort of indicative of some of the risk sentiment for today. But yeah, today seems to be a positive day, but it's going to be a light one simply because there's not much news that's expected to be reported on today. A lot happened yesterday with hearing from all the different central banks around the world. Fed Jerome Powell, when he spoke in Sweden on yesterday, he pretty much mentioned that he's not going to say too much about the Fed monetary policy. He's not going to disclose any details about what they choose to do for their February 1st meeting or what they're going to do for the remainder of the year. He just made that decision to remain silent on the Fed's posture for monetary policy. But what he did state on yesterday is that the Fed needs to maintain their independence and not be coerced into using monetary policy or applying monetary policy to correct issues of social concern like climate change and different things. He sort of emphasized that the Fed, they are not climate policy makers. They're monetary policy makers. They pretty much do what they need to do to sort of maintain price stability in the economy versus trying to deal with climate change and to save the planet. So then he pretty much shared how there has to be a distinction between the two, which is really surprising since we're in this whole globalism and there's been these concerted efforts among different global agencies to kind of intertwine all of those issues together. But it was pretty surprising to see Jerome Powell take a stand and say that the Fed is going to remain independent and we shouldn't, they shouldn't use monetary policy to sort of meet climate goals or sort of help these agencies meet their climate goals. So then pretty much he focused on that versus what other central bank leaders focused on, which was their monetary policy stance for 2023. And I think the reason why Jerome Powell remained silent is simply because he doesn't want to verbally intervene to affect price and affect the market mood ahead of tomorrow's US CPI data. So I think he chose to just stay out of it, since, of course, he has an obligation to not do or say anything to sort of provoke a reaction that they're not really looking for. So then yeah, he was pretty much silent. So then that kind of encouraged some risk sentiment or positive risk sentiment on yesterday as well. But right now we're looking at the currency heat map. We're seeing that the two strongest currencies for the session are the euro and the Australian dollar, which is pretty interesting because we did get some data coming out of Australia on their CPI. Their CPI is sticky. It's still high at like 7.2% year over year. It's not coming down. So with Australian core CPI and their headline CPI still remaining high and picking up, that may pressure the RBA or the Reserve Bank of Australia to start hiking rates and become a little bit more aggressive in that area. So then that's the reason why we saw Australian dollar strengthen throughout Asia into the European session. And of course, the same argument is for the euro as well. We're seeing core inflation in the Eurozone beginning to pick up steam. It's not waning like US core inflation is, but for the Eurozone and for economies across the waters, we're seeing inflation still remain sticky and sort of pick up. So we're seeing this divergence between the US inflation story and also some of the global inflation story. And we can see that in the strength in the euro and the Australian dollar for today. But we see the weakest currencies for the session is the Swiss franc and the British pound. They're the weakest currencies. And, of course, there's, reasons for why that's happening as well. But let's go to the crypto space, see what this crypto heat map is. And I would just recommend, along with looking at these heat maps, also look at the chart to see what the chart is telling you. Because sometimes there can be, discrepancy between the heat map and the actual chart, price chart. But as you can see, markets are neutral. And the same way we saw the dollar trading sideways and sort of remaining flat on the Dixie. And in that period of consolidation, we're seeing the same thing with cryptocurrencies. They're sort of like in this wait and see mode. this indecisive, just trading flat ahead of tomorrow's inflation announcement, because that's the last important set of data ahead of the Fed's next central bank meeting, which is on February 1st, Wednesday, February 1st. So then, markets are sort of on edge, waiting to see what the numbers will come out to be on tomorrow. And they're also focused on what the start of this year's earnings season, the official start, will report from the big banks. On Friday, we have a lot of the big banks that are scheduled to report their earnings, Q4 earnings and their earnings estimates for 2023. And this is also what's causing some of that liquidity and volatility to be restrained ahead of those announcements and reports from those big major banks. But yeah, for now, just follow the price action. Don't feel pressured to trade if you don't see your setups form. Just trade off of technical cues for today, and you should be fine. So yeah, I know I can go on and on. There's a lot definitely to discuss, even about the yield curve and different things. I may want to also, let me just bring this up real quick. I think this is it, USBOI. Right here, the United States NFI Business Sentiment Indicator or Index. And right here, this is just an index that shows you just business optimism. Where is business optimism? And as you can see, it's been on a decline. And right now, I know they updated the figure on yesterday, and it updated to a reading of 89.80. That's the reading. If you look to the left, you can see the last time it was at 89.80 was actually in 2013, almost 10 years ago, a decade ago. It was at these lows. So then that's troubling news, and it can kind of let you know what's happening to business optimism. If we see business optimism, which is sort of a growth indicator, it can be a leading indicator of where GDP and where growth would be for the future, then this is definitely a troubling sign, along with inverted yield curves, which we've been pointing out for the year. We're seeing, the yield curve continue to, invert or remain in negative territory. And also, we saw last week a slew of PMI data for both manufacturing PMI and services PMI report numbers that show that the economy is in contraction and that business sentiment and business activity is low. So yeah, so this is a troubling sign. So I just kind of want to point that out, that eventually at some point the market's going to have to focus on recession. Right now they're ignoring all the clues that the business optimism, that growth is waning, to sort of focus on any justification to go long and buy risk assets. But at some point they're going to have to shift their focus back to some of the recessionary concerns and price that in to the stock market. But yeah, that's pretty much it. So I don't really have much else to share with you. I'm just going to pass the mic back over to Melvin, or we can just end the session for today, since it's pretty much a light day in general. Yeah. Yeah, what I may do, I may just briefly go over something like the NASDAQ, and then we can probably call it a day for today, because really there's not too much going on. But let me go to the NASDAQ. We can do NQ. Oops, NQ1. Futures. All right. So let me spin it out. Or we can do US 100. It doesn't really matter. They're all quite similar price action. But all right. So right now we're looking at the NASDAQ. We're currently looking at the daily time frame, and what we can see here, you can see price respecting this area. Price did exactly what we mentioned was going to happen. We saw this bullish reaction. As a matter of fact, maybe I should go to US 100, because I think the drawing should still be there. Yeah, right here into this particular zone where we said the seller is going to come in at, and we can see that price pushed into this zone. That very same day we saw reaction, and then it's retesting this area again. So we're still somewhat in a bullish environment. However, things could shift actually. But we see here that every time price came to this particular zone, we had a pretty solid retracement. So there's a possibility we could see price continue pushing higher until it reaches these highs right around here. We could see price come retest this area, and then we can see price sell off again. That's if we do get another expansion to the upside, which I think could very well happen. But yeah, we see price testing this area of resistance now. Let's go to the 4-hour chart. Okay. And yeah, on the 4-hour chart, we mentioned, like, as soon as price hits this area, we look for the pullback, trade it into this zone or above it. And that's exactly what happened. We saw price pull back, came up to retest this area. So yeah, pretty interesting what's going on. But we should expect, or we should see, a potential expansion higher. What I'm thinking, let me delete this. This is where I think price could actually go, because we should make projections. We should make forecasts on what price may potentially do. And if this is a break to the upside, we can see price potentially do either a one-to-one measure move like this and push it deeper into the zone, or it could do something like this, where we look at this consolidation right here. We take the width or the height of this consolidation from the low to the high right here, and we can drag that over to where the lows is right here. So what this could tell us is that somewhere around this area is where price could potentially find some sellers, right around here. So what you could do is look for price to potentially reverse somewhere in this zone right here. Somewhere in this zone is where we will be looking for price to potentially reverse on us, and possibly provide a sell opportunity, which is not too far from the zone we identified on the daily. So again, I'm thinking we're bullish. However, we are testing this area of supply. So price could do something like this, where we see price come back down, give us another correction, gather more orders just to push up and break to the upside. So we'll see what happens. Right here, what we can see is that price did respond a little bit to this zone, and it looks like it may want to continue pushing higher. Let's drop down to the 1 hour to see how things look on the 1 hour. Okay, yep, this is the 1 hour chart, and we could be seeing a reversal. Yeah, it's quite possible, because of what we see right here. We see price give us this 3-wave correction into this zone. We could potentially see a reversal take place. So we'll see. I'll keep my eye on this, but for the most part, we want to continue to buy until price breaks this low right here. So once price breaks this low, then we know we're bearish on the NASDAQ, and we should look for opportunities to sell on a pullback in price. In the meanwhile, just stay on the side of being bullish. So yeah, that's pretty much it for the NASDAQ. We'll be looking for opportunities to buy the dips on the NASDAQ, but our bias is still long, even though we are testing this area of supply. So we have to be somewhat careful and use good money management and risk management. So yeah, that's pretty much it, guys. That's all that I would have for you guys for today. I don't really have too much. Let me know if there's any pairs you want us to take a look at. If not, then we can close shop early, and we can just go, just do our typical day of trading. We'll let you guys know if you find any setups or any opportunities in the market. But yeah, I guess we don't have any suggestions. So if that is the case, then we can close out. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we would definitely see you guys maybe on Friday. We'll let you guys know. The next day we will meet will be on a Friday. So we hope you guys have a wonderful, blessed day. Thanks for coming, Adam. Thanks for coming, Stuart. Thanks for all of those who are listening by way of webinar. We really appreciate you guys. And yeah, that's pretty much it. So enjoy your day, and we'll definitely talk to you guys soon. All right. Okay, then bye.